The McClellan Oscillator Indicator Explained. The McClellan Oscillator, developed by Sherman and Marian McClellan, is a market breadth indicator that is based on the smooth difference between the number of advancing and declining issues on the New York Stock Exchange. The McClellan Oscillator is one of the most powerful breadth indicators. Buy signals are typically generated when the McClellan Oscillator falls into the oversold area of minus 70 to minus 100 and turns up. Sell signals are generated when the oscillator rises into an overbought area of plus 70 to plus 100 and then turns down. When the McClellan Oscillator reaches an extreme high or low level, it indicates an extended condition for the market. Let's go to a chart. When the McClellan Oscillator reaches an extreme high, you see what happens to the price. We go straight down. Each time it reaches a period of an extreme high, we have an extended downtrend. It also works for extreme lows. Look at the COVID days. On extreme lows over here, and then we have an extreme value up. Now look over here. Extreme, up, down. So the most positive way, I believe, that you can use a McClellan Oscillator indicator is on the extremes, extreme highs and extreme lows. The McClellan Oscillator was developed by Sherman and Marian McClellan in 1969. Together with the oscillator, they developed McClellan Summation Index. Many principles of both are described in the book Patterns for Profit, the McClellan Oscillator and Summation Index. Some essentials. Primarily, the McClellan indicator shows the breadth or spread of the market or a market range. The mechanism is based on the difference between the fast and slow exponential moving averages, EMA, with periods of 19 and 39. The function of the oscillator helps traders mark upward and downward trends. McClellan Oscillator and Market Breadth. Market breadth is the number of stocks rising in price relative to the number of stocks dropping. Positive market breadth is observed when the number of stocks that are rising exceed the number of stocks that are falling. Positive market breadth indicates the bulls are dominating in the market and helps to confirm price gains in the index or stock. In the meantime, a large number of assets with declining prices indicate bearish momentum and downward movement. The McClellan Oscillator, MCOS. The MCOS is a 19-day exponential moving average, EMA, subtracted by the 38 EMA of a daily net advances. Number of shares that went up in price less than number of shares declined in price. It is a very short-term and rapid oscillator. If it is above zero, generally depicts money moving. If it's in a negative territory, the money is flowing out. Buyers are in control. If MOCS bounces along the zero line, fluctuating between positive and negative territories, the market is undecided and buyers and sellers are struggling for control. A trend gets established when the MCOS forms a complex structure above or below the zero line, 8 or more readings. Complex structures imply coming strength from the side of the zero line if they form. So a complex structure building above zero is a bullish signal. When the McClellan Oscillator reaches an extreme high or low, it indicates an extended condition for the market. In this respect, it is like many other overbought, oversold indicators, and like the others, our extended McClellan Oscillator reading is no guarantee that the extended market condition has to end right away. Extended readings on the McClellan Oscillator offer some additional insights when interpreted properly. This is where it helps to understand the oscillator serves as an accelerator meter for the market breadth statistics. A rocket that is fired into the air will undergo a deceleration before it reverses direction and starts to fall back to earth, and the same behavior is usually true for share prices. Also, a deeply negative oscillator reading which comes along after a long period of quiet is a handbridge of more trouble to come. A congestion occurs when the oscillator fluctuates by very small increments over several days. 1 or 2 days of small change is not enough. It has to be a sustained period. The oscillator value area where a congestion area occurs is called a congestion zone, and they usually form above the zero line. We seldom see them form at extended negative values. The basic rule to remember is that congestion zone is something to signal time to get out of the market. Oscillator signals. Generally, the indicator signals are similar to others as they are based on similar principles. The indicator chart has 5 important levels. There are plus 100, plus 70, 0, minus 60, and minus 100. When the indicator crosses them, it is a sign of potential market entry opportunity. When McClellan indicator is above 0, stock charts are in a rising phase. When McClellan indicator is below 0, stock charts are in a declining phase. One of the most common trading strategies based on a 0 level crossing. When the indicator crosses the 0 line bottom up, that's an up trade signal. When the indicator crosses the 0 level upside down, that's a down trading signal. The situation when the indicator shows a significant change, such as moving beyond 100 points and the negative area goes into positive one, it is called a breast thrust. That is a strong market reversal signal which indicates the beginning of a bullish trend. The function of the plus 70 and minus 70 levels of McClellan indicator is similar to the oscillators and indicators the boundaries of overbought and oversold zones. The overbought zone is plus 70 and the oversold zone is below 70. What is the McClellan Oscillator? The McClellan Oscillator is a market breadth indicator based on a difference between the number of advancing and declining issues on the stock exchange, such as the New York Stock Exchange or the NASDAQ. The indicator is used to show the shifts in sentiment in indexes called the breadth thrust. It also helps in analyzing the strength of an index trade via divergences or confirmation. The McClellan Oscillator formula can be applied to any stock exchange or group of stocks or individual stocks. A reading above 0 helps confirm a rising in the index, while readings below 0 confirm a decline in the index. When the index is rising but the oscillator is falling, that warns that the index could start declining too. When the index is falling and the oscillator is rising, that indicates the index could start rising soon. This is called a divergence. What does McClellan Oscillator tell you? The McClellan Oscillator is an indicator based on market breadth which technical analysts can use in conjunction with other technical tools to determine the overall state of the stock market and assess the strength of its current trend. Since the indicator is based on all the stocks in exchange, it is compared to the price movements of indexes that reflect that exchange or compared to major indexes such as the S&P 500. Positive and negative values indicate whether more stocks on average are advancing or declining. The indicator is positive when the 19-day EMA is above the 39-day EMA and a negative when the 19-day EMA is below the 39-day EMA. A positive and rising indicator suggests that stocks on the exchange are being accumulated. A negative and falling indicator suggests that stocks are being sold. Typically, such action confirms the current trend in the index. Crossovers from positive to negative or vice versa may signal the trend has changed in the index or exchange being tracked. When the indicator makes a large move, typically of 100 points or more from the negative to positive territory, that is called a breadth thrust. It means a large number of stocks moved up after a bearish move. Since the stock market tends to rise over time, this is a positive signal and may indicate that a bottom in the index is in the prices and are heading higher overall. When index prices and indicator are moving in a different direction than the current index trend may lack strength. Bullish divergence occurs when the oscillator is rising while the index is falling. This indicates the index could go higher soon since more stocks are starting to advance. Bearish divergence is when the index is rising and the indicator is falling. This means fewer stocks are keeping the advancing and going prices may start to head lower. A significant change such as moving 100 points or more from a negative reading to a positive reading is called breadth thrust. It may indicate a strong reversal from downtrend to uptrend is underway on the stock exchange. Interpretation. Think of the McClellan Oscillator as the MACD for the AD line, which is a cumulative measure of the net advances. Just as MACD puts momentum into price plot of a stock, the McClellan Oscillator puts the momentum into an AD line. The McClellan Oscillator is a positive when the 19-day EMA shorter moving average is above the 30-day longer move average EMA. This signal that advances are gaining the upper hand. Conversely, the indicator is negative when the 19-day EMA is below the 39-day EMA. This signals that the declining issues are dominating. Signals typically for MACD applied to McClellan Oscillator. First, the McClellan Oscillator generally favors the bulls when positive and the bears when negative. Second, chartists can look for bullish and bearish divergence to anticipate reversals. Third, chartists can look for the breadth thrust to signal the start of an extended move. Limitations of using the McClellan Oscillator. The indicator tends to produce a lot of signals. Breadth thrusts, divergences, and crossover all occur with some frequency, but not all these signals will result in the price index moving in the expected direction. The indicator is prone to producing false signals and therefore should be used in conjunction with price action analysis and technical indicators. The indicator can be quite choppy, moving between positive and negative territory rapidly. Such action indicates a choppy market, but this isn't evident until the indicator has made this whipsaw move a few times. Calculations of the McClellan Oscillator. The McClellan Oscillator uses the exponential moving average of periods of 19 and 39 of advances and decline in stocks. Advances mean the number of stocks closing above the previous day's close. Declining means the number of stocks closing below the previous day's closing price. McClellan Oscillator formula equals exponential moving average 19 period EMA advances minus declining minus exponential moving average 39 period EMA of advances minus declines. This is a simple formula and it helps a lot in making trading decisions. How to trade using McClellan Oscillator. The best way to trade with this indicator is by adding other tools like support and resistance or supply and demand. Let me make it clear to you that it's pretty risky to trade with this indicator alone. It only shows the sentiments either bulls are in force or bears are in power. It does not give a trading signal with a stop loss and take profit. That's why you can use it with other tools to make a perfect trading strategy. Buy opportunity. The oscillator will cross the line from negative to positive, then look buy opportunities. I mean, use a bullish candlestick patterns with moving averages to take a buy entry and hold a trade until the moving average break out into bearish direction. Sell opportunity. The oscillator will cross the zero line from positive to negative and then look for sell opportunities, for example, in the strategy of moving average and bearish candlestick patterns. Open a sell trade in the formation of a bearish candlestick pattern by conforming the bearish sentiments on the McClellan Oscillator. Divergences in McClellan Oscillator. Another way of using the oscillator is to identify divergences between the oscillator and the price action, because divergence detects the trend reversal signal. It can be used to find both bullish or bearish divergences. Similarity of the McClellan Oscillator indicator to the MACD. As the McClellan Oscillator is a technical tool designed specifically for stock analysis, we suggest traders apply it together with other indicators of price action instead of using it alone. In the meantime, the fact that it's based on a similar mechanism to that of the MACD, the latter may be a good alternative for both stock, forex, and other market sectors. On top of that, MACD has proved to be notably more reliable than McClellan if used alone. Using it will provide more knowledge and practice to those traders who want to understand the McClellan indicator too. Therefore, traders are welcome to learn more about the MACD to understand how to best use both indicators. Study how the indicator over extended periods of time and in different market conditions before relying on the indicator for trading purposes. The difference between McClellan Oscillator and the McClellan Summation Index. The McClellan Oscillator was developed by Sherman and Marian McClellan, who has also developed the McClellan Summation Index. The McClellan Summation Index adds the current day's McClellan Oscillator to the previous day's McClellan Summation Index. In other words, the Summation Index is a cumulative measure, whereas the oscillator is not. While the oscillator may be more useful for analyzing shorter-term trends, the Summation Index is more applicable to broader and longer-term price trends. Conclusions. The McClellan Oscillator measures the momentum of the AD line or net advances. As momentum oscillator, it is prone to the pitfalls of normal momentum oscillators such as the MACD. Bearish and bullish divergence can produce some great signals, but these signals are certainly not fail-proof. The same is true for breadth thrusts and crosses into a negative or positive territory. Like MACD, the McClellan Oscillator is a rather volatile indicator that produces many potential signals. Signals should be confirmed or refuted with other technical indicators and chart analysis. Chartists can also study the past behavior to get a better handle on the future behavior. The bottom line, the only drawback of this indicator is that you can only depend on this indicator to trade the market. Otherwise, it's the best way to analyze market sentiment, so you can open or close trades according to the sentiments. Make your trading strategy and add this sentiment indicator. Your winning ratio of the strategy will improve to a greater extent. It is recommended to backtest the indicator before using it on a live account. You know the catchphrase. Study it, analyze it, adapt it. Peace.